Is there a looming threat to the housing market? By the end of this video, you're going to learn more about the housing crash that already occurred. You're going to get my housing price prediction for next year, and also you're going to learn why higher mortgage interest rates, which are expected, correlate with an even lower supply of housing than what we have right now, if you can believe it. Hi, I'm Keith Weinhold. This is Get Rich Education. First of all, let's take a look at where we are now with regard to housing supply. This should be a familiar chart to you if you've been following me for a while here. We're looking at the active listing count of homes for sale in the United States from FRED, the Federal Reserve Economic Data. As you can see, we have been in a long, gradual decline up into 2019, and then from 2019 until the recent trough, we've lost 63% of our housing supply, and you can see why I talk about the housing crash has actually already occurred. It is not a housing price crash. It is a housing supply crash. That is really significant. And to get an update, look, we've climbed up to 636,000 available homes here in the latest month ended, which is still really low, way below historic norms. Some people consider a crash to be a 20% drop in something. Again, this is a more than 60% drop. This is why people are fighting over homes. This is why home price bidding wars still occur. There aren't enough homes to bid on. And you know, so many people made wrong housing price predictions this year, and few people will admit it. Just go back and look as to what I was saying over the last year as to what is going to happen to housing prices. They're going to continue to rise. That's what I've said up to this point. I'll tell you about my prediction here shortly. Importantly, one needs to look at history over hunches. That's really a theme with what we're going to look at here. You can make a hunch about the future, but let history guide you in making that extrapolation as to the future direction of something. I also stated about a year ago on the Get Rich Education podcast that the current administration does not want to see people lose their homes. That's really important when we had things like forbearance and moratoria, which are hopefully completely rear-viewed now. So the housing supply crash already occurred, down 63% since 2019. And see, builders cannot bring enough product online, and that's not going to change anytime soon. Even if they did have the supplies there, builders have had difficulty with labor, and of course supply shortages continue for everything from roof trusses to door hardware to kitchen cabinets to drywall and more. That's why supply cannot be brought up, which is really important when we look at what future home prices are expected to be over the next year. Really, the looming threat that a lot of people thought was coming were if a lot of homeowners feel like the pandemic is over and they just put a whole bunch of homes on the market at one time, making the supply shoot up and hence suppressing prices. However, that is appearing with the passage of time to not happen. As more and more virus variants get introduced, it just appears that this is going to be a diffuse condition over time and a gradual realization that the virus is not going to have a sudden end point. That is very unlikely. Hey, go ahead and put a YouTube like on this video if you would. If you've learned, I think, really about the housing crash is the fact that it's already occurred. It's a supply crash, not a price crash. I'd really appreciate the like if that gives you a new perspective on what a real crash is and the fact that it did happen. There is also upward price pressure on homes as more dollars are being introduced into the economy. You even had an infrastructure bill. Though you did have the Fed introduce the taper. They're going to taper the amount of dollars, tapering that flow of extra dollars that come into the economy. Yeah, but it's still extra dollars coming into the economy. The taper itself isn't even expected to be over until the middle of next year, and that doesn't include other things like massive infrastructure spending. So more dollars in fewer homes, well, of course that sets one up for higher prices in itself. So let's talk more about this low supply as we look at this chart again of the available homes and how low it is and how long it's going to take us to dig up out of this trough. Some economists think it's it's going to take us a decade or more to get housing supply and demand back into balance. An important thing for you to understand when there's a low supply of housing is that housing is a non-discretionary item. Let's call it a good. And what I mean by non-discretionary is you must live somewhere, whether you own your home or rent your home, or I guess even live with your parents, or even if you are homeless, and the more appropriate term for homeless is houseless, if you live under a bridge. In all those cases, you're still interacting with real estate somehow. That's why I say that real estate is non-discretionary. You cannot sit out the real estate market. Wherever you're watching this from, you are interacting with real estate somehow right now. Understand how that differs from other goods in the economy. Say that there's high inflation in the price of beef. You like to eat beef, but you can substitute it with chicken, okay? Beef is a discretionary item. You like it, but you don't need it to survive like you do with real estate. Or if nectarines became really scarce, therefore the price went up, you could switch over to apricots and it really wouldn't diminish your quality of life all that much. Those goods are discretionary. Housing is non-discretionary. It is inescapable. Everyone needs it, and that's why when there's a low supply of housing, the prices typically go up. There's just no sitting this out. Now, when it comes to bringing more supply onto the market and thinking about some other ways to do that, some people wonder about 3D printed homes. Where are we for the technology with that? Can't we just go print a home just like that? No, it doesn't exactly work that way. There are substantial limitations with 3D printed homes. A lot of companies have tried to make inroads here, notably the Winsun company of China. They've made a lot of 3D printing inroads, but it really isn't picking up traction. There are a number of limitations with 3D printed homes. You still have the cost of the land if you make a 3D printed home. There's still the cost of material, typically a lot of concrete, and there are a number of other limitations with 3D printed homes. It still takes a little bit of labor, and printing a second story is still really difficult. I won't drill down on that too much. In fact, on Get Rich Education podcast episode number 347, I cover 3D printed homes extensively and really talk about their limitations and their potential. Most people don't see it as any short-term or intermediate term solution to getting us up out of this low housing supply. You can check that out again on Get Rich Education podcast episode number 347, where I talk about 3D printed homes and where we're at with that. And by the way, the Get Rich Education podcast is different from this channel. That's different content over there. Sometimes the interviews from there will be brought over here onto our YouTube channel, but that is mostly a completely different learning experience for you there on the Get Rich Education podcast. I've had every guest you can think of come alongside me for a few episodes, from Robert Kiyosaki to Grant Cardone and more. And if you don't know about listening to podcasts, you can download the Get Rich Education app. Tiny homes are something that people think could help alleviate the housing shortage. Even if they're zoned for that, even if you get tiny homes out there and in use, well, you got to think about what people are doing. They're diminishing their quality of life if they move from, call it a 2,000 square foot single family home or even attached home into a tiny home. Now, higher mortgage rates are expected next year. I don't expect them to be too much higher, and a lot of people mistakenly think that higher mortgage rates correlate with lower prices. Take a look at this chart right here. The last 6 times that mortgage rates were higher, prices went higher every single time. It's happened 6 times since 1994, and it's expected to happen for a 7th time next year. Higher rates lead to higher prices, which is counterintuitive. I talk about that in my other media, so I won't get into that here. That's another direction that show us that prices are likely to rise next year. I'm going to tell you how much I think home prices are going to rise in just a few minutes here. Let's look at demographics. 25 to 34 is a populous age cohort. Those people, if they have their own family, okay, that might have stayed stable in the pandemic, but people in roommate situations, they soon learned that when they both worked from home, that didn't work out so well, and they each wanted to get their own place. So recent demographic trends have made for greater demand for homes. People aged 25 to 34, pandemic or not, they are in prime household formation years. The United States population continues to grow at 1 to 2 million people per year, but it's really prevalent with a higher number of people in that 25 to 34-year-old age cohort. The demand is there. Now, as mortgage rates rise next year, you got to think about what part of this you want to play as a real estate investor. If mortgage interest rates rise and the economy stays strong, which I expect for 2022, that might still be okay for mortgage companies that are making new purchases. But when mortgage interest rates rise, refinance volume really sags. So you've got to think about that if you're invested in, say, mortgage company stock. Understand that this housing supply crash, which I've just shown you has happened, that's actually a bigger deal than a housing price crash. Let's not confuse a housing supply crash, which did happen, with a housing price crash. A housing supply crash, you can make the case that that's worse, because what does it say about a nation when we can't adequately house our people? I mean, food, shelter, and safety, this is the shelter and really part of the safety component as well. That's why a housing supply crash is actually a bigger problem for society than a price crash is. Higher mortgage rates, which are expected next year, it also means an even lower supply of housing. Yes, did you realize that those two things are correlated? If you don't understand why higher mortgage interest rates correlate with a lower housing supply, let me tell you, you actually already have the answer inside of you, but you just never asked yourself this question. Here's how to understand this. Let's say you own a home and you are paying a 3% mortgage interest rate. Say that mortgage interest rates go up to 5%. How likely are you to sell your home now? Well, gosh, not very likely, because just to get an adequate replacement home, you'd have to pay a substantially higher price. You're more content to hold on to your 3% interest rate, because if you sell the home, you'll lose your 3% interest rate and you have to go pay 5% elsewhere. Now, a few people would still sell their homes, but fewer people will sell their homes because they'd be subjected to a higher mortgage interest rate. This is what I mean, that you've already had the answer inside of you, but you just never asked yourself the question as to what you yourself would be likely or less likely to do if mortgage interest rates rose. Fewer people bring their homes onto the market. Yes, even another downward supply constraint. Hey, go ahead and put a YouTube like on this if you learn a little something here. If you like learning kind of the economics of real estate investing, is what we're talking about here, for example, with why higher mortgage interest rates correlate with a lower supply of housing. These are long-term principles that you can keep with you for decades. All right, so the housing supply will stay low. 636,000 homes available now. I'm about to reveal my prediction, and then I want to talk to you about what actions that you can take based on my prediction for housing next year. I expect there to be 9 to 10% home price appreciation next year. Yes, that is Get Rich Education's national median home price appreciation forecast for next year, between 9 and 10%. Now, oftentimes you look at figures like that, I think it's prudent to ask, oh, okay, well, why didn't you think that home prices would appreciate more? In fact, this year they've appreciated 15 to 20%, because at some point there is an affordability constraint. And why don't I think appreciation will be lower than this 9 to 10% rate? That's because we have a strengthening economy and we have that aforementioned low supply supporting those higher price levels. So as far as what you can do before home prices and mortgage interest rates go higher, is you would likely want to buy more property sooner than later. Real estate is that one vehicle that's made ordinary people wealthy more than anything else. I connect you with the best national providers, many of whom I invest with myself, at greturnkey.com. A lot of those providers are in the Midwest and South, where you get the highest ratio of rent income in proportion to a low purchase price there at greturnkey.com. Hey, if you like information like this, go ahead and hit the like button. And if you haven't subscribed, I'd be grateful to have you as a subscriber. But when you subscribe, what you need to do is you need to hit that notification bell. That's really the only way that you get a little notification that there is a new video ready here for you. And go ahead and leave a comment below in this particular video about what you think with my 9 to 10% Get Rich Education home price appreciation forecast for for next year. And what I will try to do is reply to your comment myself about that 9 to 10% home price appreciation forecast. You'll know when I reply because I'll put my name, Keith, afterwards. Thanks so much for stopping by. I really appreciate you, but you weren't here for me. You were here for you. I'm Keith Weinhold. We'll see you in the next video.